Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Scott Carson with us. Scott is the founder of WeCloseNotes.com. This is an alternative investing episode because we're diving into note investing, which is something we don't often do here. So I am super excited to have Scott with us. Scott, thank you very much for hopping on the show.
Gabe, honored to be here, man. And I'll tell you this, it's not as alternative as you think. Everybody's in the note space. Everybody's in the paper space. It's just that most people are on the wrong side of the payment stream.
That is a great way to look at it. All right, Scott, I told you before we jumped on here, we always start with stories at the Real Estate Investing Club. I'm sure you got a good one. So why don't you take us to your story? How'd you get started in real estate?
Well, like many people, I've been an active investor for over 20 years. And like many people, I graduated college, went into the regular JOB world and loved, me and my ex-wife now, loved the old HGTV Flip This House. So we bought our first house out of college. And this is back in 2001, of course. So, you know, our realtor was like, oh, you've got great credit. You should become a real estate investor. You should buy a couple other properties because you can get great financing. So we're like, yeah, sure. I've watched all the Flip This House shows, and my dad owned the local hardware store growing up. So why not? Oh, sure. And so we bought two investment properties, and within a matter of 90 days, both the tenants that we put into that got laid off. Then I got laid off of my job. So we were making 6 mortgage payments on a private school teacher salary. And tough way to take it on the chin when you start off. Luckily for us, we were able to get rid of the 2 investment properties. We were able to get a modification and keep our primary residence. And so that was my first foray. And I think the only person that made any money on those properties was the actual realtor making the commissions. But thank God I didn't take that as one and done. A couple years later, I was back in banking and finance and met a buddy of mine that I worked with before I got laid off. And he started a mortgage company and was working with a couple of real estate investors, traveling the country, teaching notes and owner financing and credit financing. So I knew that's what I wanted to do. So back in 2004, 4th of July weekend, I was on a plane headed to the Marriott LAX and was speaking about mortgages and really started learning how to invest in real estate the right way. And so, that's kind of a bit of my foray. 4 years running a mortgage company, doing subject to deals and options on deals. But then when everything hit the fan in 2008, that's when I came to the sexy side of real estate, started buying debt. That's what I've been doing the last 15 years pretty much, is buying notes on residential commercial properties across the country.
Awesome, man. I love it. And it sounds like, you had a tough introduction to real estate, but I always say that's the best way to start, because then you're kind of going into it eyes wide open. Real estate can definitely hit you in the face at points. And so you got that right at the beginning. That's good.
I had the whole Mike Tyson punch out, 1-2 punch right off the back to begin with. And I think, but that's, you learn. I think we all start off cocky a lot of times. Oh, I know, I can do this. I can fix it. I can learn everything I need to do at YouTube U or whatever it was. And that's not the case. So luckily for me, we got out of it pretty unscathed, but I think it helped me empathize for a lot of people, facing difficulties and hardship, especially like what we've seen the last 2 years.
Mm-hmm.
And as a note investor with my notes, I really do empathize with people that are going through financial hiccups. That I think it makes me a better investor, actually, of being able to talk with people like, look, I've been there, done that, got the scars. Let's create a solution, a true win-win that makes it work for all parties involved, and then go from there. So.
Yep, leading with empathy can definitely open different doors because you see different options. So that's good that you went through that. You got that perspective. And you know what, I think we should just blame HGTV, because that's really the culprit here. Is they put the sexy image out there. All you got to do is just buy a property, call up Tim and Mary. They're gonna flip it for you, and it'll be all done.
Yeah, exactly. I mean, they're great, but those things were so brand new kind of back then. With things, with the shows and stuff like that, it's hard not to fall into it. It's helped, especially after you read like Rich Dad, Poor Dad. You start going down that aspect. I want to do that. I can do that, and I can buy 2 properties without having to put anything down. Sure, let's do it. You know what I mean? It's the whole, you live and learn, and I think that's one of the best things that you can do. Is it wasn't fun going through that period of time frame, shaking out the couch cushions to get money to put in your car for gas as you're trying to figure things out, but. I think that's one of the best things is if you're going to be successful, every entrepreneur goes through ups and downs. And I think you've got to build that thick skin to see if it's really for you, because real estate's not cut out for everybody. You know what I mean? But those that can become coachable or are coachable and learn from mistakes. Like you said, that's the school of hard knocks. You learn more from your mistakes every day than you do from your successes, for sure.
Yeah. But hey, I mean, you've made it through. You're on the other side, which is that's what we're here to talk about, is your other side. So you're in note investing. This is what you do full time. Note investing is not something, I said alternative. I do feel like it is something that is an alternative strategy, because it's not, widely known how to invest in note investing, what it even means. So can you kind of just lay the foundation for us? What is note investing? What does it mean as an investor?
Sure. Most people think of note investing. It says I'm going to owner finance a property. I have a property I can't sell, or the borrowers can't get qualified. So I'm going to owner finance a property and carry the paper for 20, 30 years. And that's one niche of note investing.
That requires you to already own the property, which is something that not a lot of guys can do.
Exactly. They fix it up, and I want cash flow, or I don't want to deal with toilet stints and trash outs anymore. And that's fine. Totally aspect of it. But what we do, we're on the opposite side of that. I guess you'd say the note investing side. We actually buy the debt direct from banks. So banks obviously have non-performing mortgages on residential commercial properties across the country. And we reach out to these bankers and the departments inside, and banks send us lists of their non-performing mortgages where somebody hasn't paid their mortgage, for usually at least 6 months, sometimes up to 6 years. We see commercial stuff, self-storage, apartments, housing, hotels, restaurants. We see stuff like that all the time too. The banks want to get off their books because it's non-performing. And for every month that a borrower is behind, the value of that mortgage depreciates. And so we step in, buy that debt at a big discount off of what's owed and the value of the property. And we make our money by working with the borrowers to either get the borrower back on track through payments, modifications for our payment plans. Sometimes we'll pay the borrowers to walk, give them some cash for keys or deed in lieu. Or if the borrowers won't work with us in some sort of fashion, because we are now the bank, we have all the rights that the bank does. If they won't work with us, then we go the legal route and go the foreclosure and take the property back. So our biggest goal really isn't to take property back. It's actually to get the cash flow going, to get borrowers back on track, because it's kind of 3 paydays, monthly payments. You get some skin in the game from the borrowers and a friend end of some sort, and then you get a big payday 12 to 24 months later on if you sell the note off or the borrower refinances that after a couple of years.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Perfect. I love that. And I love that you're, especially on the commercial side, you're working with the borrowers to kind of get them back on track. Because as a commercial investor myself, there are so many ways that you can, if your property's not performing, there's a lot of ways that you can turn it around. So sounds like you guys also do some consulting with your clients, or with your, the note, as the note holder, you work with your clients to help them get on track.
We do, if we can, as best they can. And it's all comes down to, especially in the commercial side. I will talk about that a little bit. Is should they be operating? How bad is the asset been mismanaged? I mean, one of the first relations we had was with Capital One Bank and their commercial side, and they sent me over a huge list of their commercial stuff, small balance stuff, usually sub $2 million in value, and most of them, the borrowers were just not performing it, properly. We bought it. We actually took over a self-storage unit out of Houston, Texas. It's about 250 units. On the outskirts, they just robbed them from Peter to pay Paul. And we were able to pick the debt, basically a 50% discount on the debt. And then actually the bank carried the financing for that. So it was a great thing. The borrower was ready to walk away. So the bank didn't want to take an REO back. They were willing just to, they wanted that non-performing note to get reperforming. And so in a matter of 12 months, we got that asset backing up and sold it off for a pretty penny. The bank was happy because they didn't have to take a loss. We were extremely happy, and because we made a good profit on it. And then, of course, the borrower that was originally on it was happy because he was able to walk scot-free and move on to something else versus having this kind of, this bad thing hanging around his neck that he wasn't able to work on. It's, bad management, bad teams. I think it all goes back that he bought something and wasn't set up right to do it to begin with.
Yeah. And that happens a lot, especially in commercial. People, they see the sexiness of owning a multifamily, owning a, self-storage facility. They don't know how to operate it. They jump into it. They're too far in. So that's where you come in. So I do have a few questions just about how it operates as a note investing business. So if you're doing, commercial investing, retail investing, if you want to flip a property, buy one to hold it, the first aspect of that is finding the property, doing marketing, calling brokers, sending out mailers, all that kind of stuff. With note investing, it's different. So how do you guys go about finding the investment? How do you go about finding that note to purchase?
Great question. It's a lot cheaper actually than most people are familiar with because we do zero direct mail. All Great. Of our stuff is via yeah, I know, right? Ours is direct is drip marketing more so than anything else, and it's via LinkedIn. We use LinkedIn to find asset managers at banks that we drop an email out twice a month to asset managers. We'll dollar for dollars, pick up the phone and follow up with those that opened our email or connected. So you got to realize there's thousands and thousands of lending institutions, and every quarter we get an update. Every bank that's FDIC insured has to disclose how their portfolio is doing to keep that insurance. So every quarter we're able to download a list from a third party that shows us which banks are struggling or what percentage of a bank's portfolio is in distress or, coming down the pipeline distress. And that gives us a good target to reach out to and touch base with these asset managers. Hey, what do you have in your books you're looking to get rid of? And so, and there's always two sides of the bank. You have the residential side and then the commercial side. So it's usually two different contacts a lot of times. But the beautiful thing is once we get on that list, they're sending us their spreadsheet, or as we call it in the business, their tape, which is just an Excel spreadsheet of all, I guess you say, their problem children's. Whether it's the residential side or it's the commercial side. And then we, it's all about going back, okay, what do you want for this? How far behind is it? We get all that information, see the servicing notes, how responsive they've been, or then we're doing due diligence on the borrower, the property, and then also the collateral file. And if that works out fine, where it makes sense, then we wire in the funds, we take over the mortgage, and then it's reaching out to the borrower in some sort of fashion to try to get them back on track or see where they want to go and how they want to proceed.
Interesting. So how do you guys, you found your asset manager, they sent you the list. You get a list. Let's just say there's a property out there. It was purchased for $1 million. How do you value that? If you're going to purchase it, as a regular investor, you would pull comps, you'd run, cap rates, look at their NOI, that kind of stuff. How are you coming up with your number to offer the bank?
It's just very similar. That's one facet of it, is looking at, okay, what's the value? If it's a residential property, you're pulling comps and rent rates and comparing what's owed to the value of the property. And most of the time we're buying assets where they owe a lot more than the property's worth. There's no equity there. Yep. So that takes away a lot of the borrower's fight. So there's no equity there. They're glad for us to kind of come and say, listen, we're that bank. Usually we start at 50, 60 cents on the dollar or less, depending on the foreclosure time frame. Right. If the banks restart foreclosure, it's closer to the foreclosure be done, we'll bid closer to 60, 65, 70. If they haven't started the foreclosure legal process, we'll start usually 40, 50 cents on the dollar or less, depending on the value of the asset. But we'll look at that. We will run numbers. Okay, what's it going to be like if we get the borrower back on track? If they just start making their existing payment, what's it turn out to be? We're usually shooting for somewhere around a 15 to 25% ROI just on the reinstatement. If we have to modify the loan or do a forbearance agreement where they bring a little bit extra to the table, what can we do with that? If that doesn't work, can we do a deed in lieu? What's it going to look like if we have to take the property back and sell it off in 6 months for deed in lieu? And then we also look at the foreclosure process. Okay, if they won't play ball, then it'll take us a year to foreclose. What's the foreclosure auctions looking like today? What kind of numbers are we seeing in an appreciating market like in Seattle and Austin, where the price appreciates some? We can offer more. If it's in a flat market, that we also take that consideration. But that's kind of looking at it. And then it's just going back and forth with the bank. Sometimes the banks play ball and sometimes they say no. And if they say no, okay, we just put it on our follow-up list, and you'll be surprised what happens come the fourth quarter or the first quarter of the year when they've held on to this asset for 6 months and it's not gotten any better for them. That's what's so great about 2022. These banks have been holding on to these assets for the last 2 years. In a lot of cases, the borrowers have made payments or stopped making payments, and they've been really, really great to work with them. Residential and commercial borrowers out there, they've been really great about this. But at some point, the piper's got to get paid. And we've seen a lot of amazing, I say this contact where banks are reaching out to us. Our emails are getting open more. Our phone calls are actually being returned in a lot of cases. Hey, beautiful. What are you buying? It is a beautiful time. It's also can be kind of scary a little bit if you think about it. But we foresee we've already seen more debt hit our books, come across our desks in the last 6 months than we saw the previous 3 years. And it really started on the commercial side. Commercial was the first stuff that banks were looking to move. But yeah, it's going to be a good time to be a distressed debt note investor here in 2022.
Yeah, I just checked the time. We do have to move on. I want to get into kind of what you think about the future of the economy, but we can save that for another episode. One question I do want to ask before we move on. Sure. I'm always a fan of learning how people manage their portfolio, manage their, in your case, debt. In self-storage, there's so much software out there to help manage it. Like I use ESS, but there's tons of them out there. What do you use in the debt sector? Is there a specific software that you recommend to manage your portfolio? Or
so the beautiful thing is, since we're buying debt, we use a servicing company. There's a third-party servicing company that collects our payments, sends out the statements and stuff like that. So that's one of the beautiful things is we use a third-party servicing company to manage that, and then it's QuickBooks to match that stuff up with depending on the assets and the investor stuff like that. But you've got mortgage office, you've got back office, you've got a few other different programs that people use a lot of times. We get a spreadsheet every month for who paid, who didn't pay by the 5th and the 15th. And then it's okay, who didn't pay, let's kick it to the legal team of our attorneys or send out a demand letter and try to reach back to the borrowers. Hey, you haven't paid this month, are you going to pay or not? If not, let's go ahead and kick it to legal and get that ball rolling. Gotcha.
Okay. So yeah, I own two mobile home parks that were seller financed. And nice. Yeah, that we did the same thing. We went with a evergreen note servicing. So that's the same thing you do. You get the debt and then you just call up, XX note servicing. You say, here's my debt. Can you service this? And they say, yeah, okay, we can do that.
Yeah. And it's a beautiful thing. I mean, then it's a wire, people love mailbox money. I like wire money, where just the payments come in on the 5th or the 15th, depending on how we negotiate. And then so they alert us if things aren't, the borrower's late or they're checking taxes owed. A lot of times they'll escrow the taxes and the insurance into and stuff like that. It's good to have that. When you're buying debt on the residential side, you've really got to worry about the Consumer Finance Protection Bureau and some other things, Dodd-Frank. aspect of stuff. Commercial side, I could self-service our commercial dev if we wanted to, but it always makes better to have a third party that does it, that tracks everything and scans everything and makes it very, very clean when we get around to selling that debt off after we held it onto it for 12 to 24 months.
Yep. Makes sense. All right. So I am going to move us on. But thank you very much because you've given us a lot of information about debt. I'm sure people want to reach out. Before we get there though, we got to jump into the quick question round. You ready for it?
Bring it.
Boom. Right there. All right. Starting out. Oh man, what is it? I lost my spot. There we go. Starting out. I always start with books because I'm a big bookie. So if you could pick two book recommendations, and it doesn't have to be books. If you don't like books, you can do YouTube channels, movies, whatever you want. Two sources of education, one for general life wisdom and one for real estate specific.
So I would highly recommend Outwitting the Devil by Napoleon Hill and Sharon Lechter. Think and Grow Rich, Outwitting the Devil. We've probably given that book away hundreds of times. It's just for those that haven't read it, it's one of my top 3. It talks about how Napoleon Hill is sitting down with the devil to ask him how he's successful. And the devil comes back, well, I cause people to drift. Those that are most successful, the ones that say no or avoid the shiny object syndromes. And the way he's successful is throwing distractions in front of us. I'm sure we've all felt that way when we're like on a path and rock and rolling, and suddenly all these opportunities come. It's a distraction so that we aren't able to fulfill what we're meant to do. And so it's really a great book. It's actually written back in 1938, but not released till about 10 years ago. When the Napoleon Hill Foundation tossed the manuscript to Sharon Lechter, she basically said, well, I don't want to change it too much. I'm just going to add what I think Napoleon would think of in the world today. And that's what she did. And it's a great book. I think everybody should read it. It'll make you think differently about, I'm multitasking. No, you're just distracted. That's what it comes down to. So that's the first one.
That's great.
And I'm going to throw a YouTube channel out that's really been really relevant. I got a buddy, Nicholas Gurley, who has a YouTube channel called Reventure Consulting. And what he does, he used to work for these large commercial firms, helping commercial investment companies identify markets, look into economics, the building permits, the growth and stuff like that. And he's got a great YouTube channel, Reventure Consulting, that goes out there and pulls up different markets and sharing what's going on in economics. Literally, he's just really done it in the last, last year. We really told him, like, look, you need to share this stuff. And his YouTube channel's gone from like 20 people to over 84 or 90,000 subscribers in this past year. So I go to his channel and pull up economic reports and market research, stuff like that out there. So it's a great resource for your audience.
That's awesome. I love it. Two great recommendations. And I love, I haven't read that book. I've heard of it, but I like just the thesis of saying no, because that is so important. And it doesn't even mean, it can be a small thing. For me, it's looking at other asset classes. I just want to invest in everything. I want to get into retail. I want to get into multifamily, but you got to choose something and you got to stick to it. That is that's the key there. So great recommendation.
Thanks, man. Well, I think we're all guilty of that as entrepreneurs. We love the growth. We like to dip our fingers in a different pie, especially as real estate investors. And it's hard not to. But like you said, I'm a big believer, hey, you got to master and stick to your lane. Master the thing you're on first before you ever start looking at something else. Otherwise, you'll water down your message and your profitability for the most part. So,
yep, absolutely. All right, moving on. Next question. This one is for your younger self. So if you could go back to the Scott who had no idea about note investing, he was still, just getting started out. If you can go back to him, look him in the eye, give him one piece of advice moving forward.
Oh, I think that's pretty easy. And I would say get a coach. No matter what you're focused on, get somebody who's been where you want to go. And that would be one of the biggest mistakes I made, is I thought I could do everything. Like I said, growing up in a hardware store, I thought I was like Tim the Toolman Taylor without blowing shit up. But get a coach. And I played college sports for a couple of years, and I had coaches. And I have coaches today that help me with my podcast, my business, real estate, stuff like that. I think you got to get a coach, because a coach will save you years of mistakes and money. It may cost you to hire a coach of some sort, but it's well worth it as long as they're doing what you're doing now. There's enough, I hate to say, charlatans out there that aren't doing what they're doing. They're just teaching and not in the world today. But find somebody who's closing deals today and make them your best friend. And be honest. Take constructive criticism, because if somebody's willing to give you constructive criticism, it's because they actually care about you finding success. You don't need a yes man or a yes woman. yes to everything. You need somebody to tell you, like, no, don't do that. Here's a reason why. So get you a coach. That's what I wish I would have done a little bit earlier on in my investing career.
Yep. And I couldn't echo the sentiment more. You don't know what you don't know. That's the thing. There are blind spots, and it's impossible for you to see them. Coaches can see them. So if you can get somebody who's in your lane and has already been where you want to be, that is, cannot be understated or overstated how important that is. So, all right, moving on. Great piece of advice. The next question is for the U.S. You're in note investing, so this will be interesting to see your response. But the United States, I don't know how many square miles there are. There's lots of them, which means there are lots of opportunities to purchase property. So if you could pick one metro, one market that you are most excited about that is not your backyard, what metro would that be?
So this is an easy answer. I live in Austin, Texas, but I haven't bought much in Austin, Texas, because we're the fastest foreclosure state in the country. I mean, we got fast highways, fast foreclosures, and fast executions. All right. So I've been investing outside of my backyard since really I got started in the debt side. So I'm actually very excited about God's waiting room, Florida, the Sunshine State. You know what I mean? So I started buying debt back in 2007, 2008, bought a lot in Florida because Florida was basically 30% vacant back at the time. And, I was buying a lot of stuff cheap, like $5,000 condos on A1A, it was really cheap. Of course, Florida's rebounded back, got expensive, doing well, but we starting to see it dip down. So I'm really excited about what's going on in the States. We're seeing an increase in foreclosures, increase in defaults. I like the opportunity to come in and help people stay in their houses. So we're really excited about to seeing some more amazing investment opportunities in Florida out there, especially here in 2022 and beyond. So that's one state that I'm really excited about. It's, I'm not probably going to be buying a lot in Miami, but I will be buying a lot in like Orlando, Kissimmee, Tampa, Jacksonville, West Palm Beach, even down like Fort Myers, Naples, Cape Coral. I love that area. So that's one state I'm really excited about.
Yeah, your sentiment has been echoed across many different episodes. It seems like a lot of people are pretty excited about Florida. I've been pretty excited about the entire Sun Belt. So I'm with you.
I agree, man. I mean, that's great along. I mean, Alabama, even parts of Mississippi. I just a big proponent of staying in major cities. 50,000 or above population. You got to make sure your insurance costs don't kill you, with many of them being hit by hurricanes over the last decade, stuff like that. But there's opportunities, man. There are so many opportunities out there, and if you have carnal knowledge of an individual market, stuff like that, use it to your ability. It's stupid not to right now, man. Stupid not to.
Yep. All right. Which brings us to our second to last question. This one is for an opportunity for you to brag a little bit. We all have strengths. You are, you're not an exception. Every single one of us are on this planet, and we have unique skills that we offer the world. And so what is your Superman strength? What is the thing that you feel you are exceptional at?
So I would say marketing. I love the marketing aspect, and I approach every day with a marketing mindset. I mean, no matter what we're in, real estate, tiddlywink, selling donuts, coffee, apartments, self-storage, we all have to have a marketing mindset first, I think, in today's world. Everybody's out there looking for attention. If you're not marketing your business or yourself, you're shooting yourself a foot. I think it's one big mistake. Steph, my significant other, would say that my dogged determination, my bulldog approach of not saying no and not giving up on things is a superpower that I have, where most people would give up on things. I keep like, no, we're going to get through this, knock this out of the park, and we often do.
Persistence always pays off. That is absolutely true. All right, that leads us to the last question. This one is for the listeners. I'm sure a lot of people out there want to reach out because you've given us a lot of good advice about note investing, about just general real estate knowledge. So, what is the best way for people to reach out and get in contact with you?
Easy. If you just go to the main website, weclosenotes.com. Weclosenotes.com is the easiest place you'll find our podcast that we do, the Note Closer Show. We do a Monday webinar every Monday night called Note Night in America. Our classes, education there. Everything you can find at weclosenotes.com. Best way to connect. And I'd like to, we offer a one-day class every third Saturday of the month. If you're interested, anybody listening to the show, if you go to noteweekend.com and use the code GABE, it'll get you in for free. So it's a kind of a Cliff Notes version. Dip your toe in the deep end of note investing at noteweekend.com. Special code GABE. You'll get the $49 class, the replays, and over 1,000 of bonuses for free.
Perfect. Well, I appreciate you offering that. So that is noteweekend.com. Use my name, Gabe. It'll get you that class for free, and also weclosenotes.com. So I will put both of those in the show notes. If anybody is interested in investing in notes and you'd like to learn from Scott, the 20-year veteran, I will put those URLs down there in the show notes. Just click the little more. It'll pull down the full description in there. You can find the link, click through, and say hi to Scott.
Gabe, awesome. I have to say one more thing here real fast, though.
Let's hear it.
For your listeners. For you guys listening out there, man, whether it's a Monday, a Tuesday, a weekend, whatever, do Gabe a favor. We as podcasters love to hear from our audience. And the best way you can do that is go over, hit that subscribe button, and leave a 5-star review. He is killing it with his podcast, taking time on his busy schedule away from his investments to bring the best and brightest, not yours included, but the best and brightest out there anyway. So hit that subscribe button, leave him a 5-star review, tell him how much you love him and how badass he's doing at the Real Estate Investing Club podcast.
Thank you, Scott. I appreciate that.
The check's in the mail, buddy.
All right. Well, that winds up our episode for today. So if you're on this episode with us, thank you guys for showing up. As always, we appreciate having you here. If you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties.
If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.